Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. And as our first chatter here is saying, hopefully the goal of tonight's stream will help you accomplish this, which is we need some of that walking around money for all you walkers out there, or navigators, whatever we're calling ourselves here. But yes, that's right. This is the Q4 2025 crypto predictions and analysis show. The reason we're doing this now is we think this is a very critical time. We want to talk about what happened in Q3, because some decently big things happen there, not just from price standpoint, but from a news standpoint and an evolution of everything going on. Outside of that, we want to talk about what's going on in Q4, because if you've been following the show for a while, you will know that according to the 4-year cycle theory, we're approaching the end game. I want to talk about what that means, what you can possibly expect, and maybe even talk a little bit about ways to potentially capitalize on it. Outside of that, it is going to be an excellent show. I'm your host tonight, Zenith, and I'm joined by my excellent cast of characters, as always. Up first, we got Tracker. How you doing, buddy?
Doing good, man. Everyone's panicking. It's all over, man. Everyone's selling, going to zero. No, I think this show is definitely needed. Kind of give everybody a perspective of, what's happening, because a lot of people think, I think in 2-3 week time spans, it seems like, for crypto specifically, because things move so quick. So it's really quick to lose a lot of what's happened and transpired at this moment. So I'm really excited to get into some of those things and let's talk about that, because you got to know where the past is. You got to kind of know what you need, know what happened in the past, and know what's going to have an idea, take an educated guess for the future. And that's what we're looking to accomplish today.
Yes, sir. Well said. Alrighty. And our third man tonight to finish off the Three Musketeers here, we got Dace. How's it going, my man?
I'm well, my friend. I'm well. Watching the last days of Q3 tick over. Doing some business cleanup stuff to try to gear myself up for Q4. Always a busy time for what I do, and so I'm good, man. It's been a productive Monday.
Love to hear it. Productivity is always the best. Alrighty. Well, Centurion 54X says the only question I need to answer is when Lambo? Soon-ish. There's a decent chance the end of Q4 is the answer to that one. But we also do have the other question here. Is the real question is, what color will your Lamborghini be? Lambos do have the fun colors. I'm particularly fond of the lime green. I think it's cool. A good red one would also be tasteful Lamborghini.
The tasteful Lamborghini. That's funny.
I don't know if there's such a thing as that. They're designed to be wild.
I was gonna say, yeah. It's I know there's pretty strict rules around Ferrari colors. Yeah, I think I would have to go with purple myself.
Ooh, there you go. Yeah,
I saw one of those yesterday, or not say yesterday, about last week. I saw purple Lamborghini in the parking lot. I was like,
Hard to miss.
Very nice.
Will be cool. I know Lamborghini's definitely had a bit of an evolution back in the early 2000s, early 2010s. I think it was the Murcielago was kind of the flagship that they had, and that was after they signed a deal where they joined up with the Volkswagen Group. So the joke at the time was that you need the Italians to design your cars, but you need the Germans to build them. Unfortunately, with the Murcielago, they let the Germans also design the car, so it looked a little bland. But then they released the Aventador, and it was back to the thing that looks like it probably has secret machine guns hidden in it, and we're back to the cool stuff now. So there you go. Centurion saying he wants a John Deere green Lamborghini. There you go, sir. There you go.
Yeah, man. That's classic Centurion.
That is classic him for sure. And Moonpill saying metallic copper and black. That'd be good. Like a sparkly black gloss finish with some like copper or like bronze wheels. Ooh, that'd be hot. Alrighty. Well, enough dreaming aside. Let's get into the main topic here tonight. So, gentlemen, we have effectively a day and 4 hours left for September. Overall, did this quarter go the way that we expected it to?
Kinda, yeah.
Yes and no. So I would say that August was the big outlier, right? July went up like we expected. August did not perform like we expected, and then September also held true to trend.
That's true. I think that July was definitely a good month, especially if you look at the Bitcoin price in particular. August was also another good month because in each of those months there was a new all-time high made. Second half of August and September has definitely been less exciting from the price standpoint as the other ones, but we have been getting some news events coming out. Notably, we did have the Dogecoin and Solana ETFs get launched in the month of September. So that was a big news event there. And of course, we had the Federal Reserve actually start to decrease interest rates. That is the big story there. So September, boring from price standpoint, but very, very big when it comes to news coming out.
But to go back to what you guys were saying, like, are you asking did Q4 basically, I mean, Q3, did it play out basically as we expected, right?
Yeah.
I mean, well, we had our rallies. We felt like the turn was occurring back in, obviously April time. We saw we were going up, sideways consolidation, up, little sideways consolidation, up. Now we're kind of topping out because Ethereum price was flirting with all-time highs, having resistance at all-time highs. We kind of felt like it was going to probably see some resistance at all-time highs. Bitcoin kind of pulled back, rotation out of Bitcoin into Ethereum somewhat because Ethereum started outpacing Bitcoin. So that seemed to be in order. And then everybody knew almost whether it was forecasted or not, everybody knew September was a bad month for crypto overall, and whether that was just a reason to sell because we are near all-time highs, whatever. I mean, we're seeing a pullback. So I don't really see anything that's really out of the ordinary, except for we move up, we go sideways, have small pullbacks, but we're still moving up. We still have lower highs. Now the question that everybody says is, is this a topping formation that's forming on Bitcoin and Ethereum? Or is this simple the calm before the next big pump up? Because if you go look at all the other previous bull markets, we've talked about this many times on Bitcoin and Ethereum, you always have these nice 30%-ish pullbacks on these moves up. So I don't know. To me, it feels very, predictable and was going to simply have a pullback and a consolidation. Now, maybe a deeper pullback in September than some of us had thought. I mean, that we can definitely, that's actually valid. But I don't know. I feel like it's in order. So far, it's in order. Now, if we start to pull down, start hitting more new lower lows and start really selling off and there's more shock, I think that would be a little more unexpected, but time will tell.
That is very true. And I mean, yesterday we did a little episode 100 over at the DGen Roundtable and chopped it up for a bit. And one of the things Jay was talking about when it comes to the TA was that excluding today's candle and yesterday's candle, there was a lot of talk about the possibility of Bitcoin actually going back down to that $100,000 level. Notably, he was saying there's a good chunk of buy orders in down at that $104,000, $103,000, $105,000 area, and now we're sitting back up near what is it, 112 right now, I think. So, yeah, the fears about things going down is definitely up there. And in particular, if you look at the fear and greed index for Bitcoin, I think 2 days ago it was sitting at 37. Which, for being at the top part of a bull run, that seems pretty low in my opinion. But outside of that, yes, volatility is always part of this game. We got to keep that in mind. Right now, we are experiencing some nice volatility towards the upside, which I appreciate. But I do want to start off with the question of why do we think that Q4 is the start of the end game? And well, to answer that question, let's pull up some historical data here. So, looking at Bitcoin on TradingView, this is 2013 to 2017. We had 210. This is the weekly chart, by the way. We had 210 candles or 210 weeks, effectively 4 years almost to the day when it comes from a top to a top. The next one, going from 2017 to 2021, 204. So that's closer to about 3 years and 10 months, closer to 3 years and 11 months. Where are we at today? We're at 203 weeks since the last all-time high. So if you compare that to these two, the average of that would be about 207, meaning if you went purely off the historical data there, that would mean that we are, if everything repeated perfectly, we are about 4 weeks away from the all-time high of Bitcoin for this cycle before it starts the inevitable dump. One of the things that we're going to get into tonight is the possibility of how deep into quarter four can this run, and if there even is the possibility that this could run into quarter one of 2026. I think that one is a bit more of it requires more explanation because that is the most recent formed theory about this stuff going on. Whether it's all the different clips that we've shown the folks at home over the last few months about people saying that, oh, yeah, definitely extended cycle this time. We'll get into that for sure. But as it stands right now, is it logical to say that purely based on the 4-year cycle theory and just looking at the time counting, that this quarter four is most likely to contain the end game or the Bitcoin all-time high for the cycle top. What do you guys think?
I think you laid it out well, my friend. I think you know, the cycles, the duration of the cycle is not exact, but it's pretty close, like you said. I do think the big difference here, and we've harped on this a lot at the show, is the institutional presence, is greater amounts of leverage and its impact on price action. And so there's charts out there plotting out each 4-year cycle in terms of its velocity to the upside as it moves through the 4 years of time. And we have the most muted, the most sort of tame trajectory in terms of how much we've moved up from bottom to top, relatively speaking. And so that's part of that thesis about Q1, right? About it running longer and even into 26 is some of the reasoning for that has to do with the fact that we haven't had that same amount of inertia to the upside.
That and a lot of other things that have been, this whole thing has been, because of the institutions that Dave's pointed out, that's extended this entire bull run, extended it. Could that be leading to a lot of, obviously it's led to a lot of frustration and exhaustion in the market from a lot of different people. And I think now you're at the end. I mean, it's setting up nicely because there's going to be people, quite a few people probably selling just on this alone. And maybe they're right. I just think you're going to see institutions are going to be buying this because they've already made it clear they're looking much longer out. And institutions are also starting to buy these because they're looking just to start staking the yield and earning yield, passive income, just on holding the Ethereum. So essentially putting a floor in Ethereum. Not saying that this level we're at now is going to be the floor, but there will be some type of floor put into Ethereum because of these institutions that are just going to simply hold. And if they're going to hold it, then that's going to be an interesting take. We've already been seeing that treasuries are falling out of love with mutual funds and in traditional TradFi investors. They're leaning away from treasuries big time because of all the problems that benefits crypto because of the monetary policies, or that lack of it, I should say. So I see the institutions moving into other assets that are going to also fuel this as well. Whether it's a hedge against a hedge due to the inflation and all these other aspects we've talked about. So I think the big caveat, I'm kind of diving into the subcategories, but basically the macro is essentially what Dave said, is the institutions are here. It's extending out this entire cycle. That's the big shakedown that people are going to have to wrap their heads around. Is this going to be extended? Is this a different time? Is this going to break the 4-year cycle? Are we going to extend out? Everything, and like we've talked about, if it's going to happen, it's going to absolutely happen in this cycle for all the other reasons we've talked about. And, oh, by the way, the Genius Act and all these other things that got passed this last quarter that have just, are going to pave the way. All you need to hear is the federal government's coming out and they're giving out you details on what the crypto reserve currency is going to come out as. They come out with that, it's going to absolutely pump the market, because if they come out saying they're going to start accumulating. The interesting thing on Dave, you posted this chart one. I know it was talking about, we were talking about this, typically the gold market makes a big move, and then you'll see rotation out of gold into Bitcoin a lot of the times, or crypto for that matter in general. Gold is still running, palladium running, silver running, all these other precious metals are running, all these other hedges against inflation are moving. And I'm not necessarily in the camp yet that people are willing to use Bitcoin as what we think it should be as a hedge against inflation. It's still too new. I don't think it's quite caught on to that. I think it's starting to catch on. I know we keep talking about it, but until it can prove that it can decorrelate from decouple from the overall market, it's not really holding true still. So I guess what I'm saying is there's so many more pieces to this that could extend this cycle. Keeping in mind, we know there's more interest rates coming. We know there's at least 2 more this year. There's probably at least 1 more in the chamber in January. By the way, Powell is out in May. They're going to put somebody in. It's going to be more aggressive. I know there was that funny meme that was put out with Jerome Powell going up the stairs and having soft landing and then falling and tumbling. It's just the cycle that just keeps going over and over again. And we're pretty much at the early stages of that, where there's a lot of, this administration has a lot of ammo to make sure this market keeps going up. Black swan events excluded, obviously, but I would be shocked to see crypto market just tank right here. in an environment that is very pro crypto for risk on assets. That's the big caveat that I just can't seem to. I can't until it proves me otherwise. I don't believe it until it can show me it will.
That makes sense. And by the way, you mentioned it, so let's pull it up here. This is the gold chart. This is going all the way back to about 2010 here. So based on what you're talking about, let's take a look at our tops here. 2017, that's going to be about December here. So this area here, notably gold in this duration, had its largest up move back in 2015, 2016. Big dip in late 2016, and then a good slow rise up before another fall. After that, let's go over to 2021. 2021, November, that's going to be right around here. And again, not much action there, but to lead up the year, pretty much 18, 19, and 20 saw a big rise out of gold.
But the interesting thing here is the chart that Dace had shows, it's really interesting. It shows you how Jace, you had it I think it was about a week ago. I saw it was a great chart because it shows just all you're seeing is a really nice chart of how people are selling their winners and rotating into the laggers that have more upside. And that's what the chart showed you. It showed you, this is right here. So you're going to see as Bitcoin runs up, you see a rotation out of gold into Bitcoin or crypto in general. And then you start to see these big moves up in the overall, crypto environments or Bitcoin in this case. So, which makes sense because if gold is going to run, people are going to take profits in their winners, rotate into laggers and so forth. And that's really what it comes down to. And if the fact that we're in a rate cut environment, risk on assets are going to benefit from that because they've lagged so much. I mean, hell, look at the Russell 2000. It's stumbling to try to break through the alt. It's broken through, but it's stumbling, out of the block basically. So that's to me is another asset, another picture that I'm starting to see. I know everyone's the big thing that everyone's scared in the overall markets is the job market, labor market, and rightfully so. That threw a wrench a couple of weeks ago, and now obviously, I don't know how true it is, but the labor market's talking about not releasing the data until if they cut out if they're gonna shut down the government basically, which I don't think they will, but that's another topic, but I think that's interesting. The labor numbers are coming out on Friday, and they were threatening not to release them if there's going to be cuts in the market. But politics aside, rotation into winners, into laggers, and this is a great chart.
For sure. Speaking of which, let's go back to the gold chart because there's something going on there.
Yeah, gold. Well, look at it. Gold had a sideways consolidation. This triangle, upward wedge triangle was forming going back to end of April, all the way until August, the tail end of August. It was in that consolidation range. And then once it broke out, it was a textbook breakout and right off to the races it goes. The silver market's also been running a little hotter. Palladium and other assets have been starting to run too. And so it's interesting, but they're certainly running. Gold is gold is in the perfect environment. You have inflationary aspects. You've got, printing of money going on. You've got uncertainty with the US dollar around the world. I mean, the list goes on and on and on.
That makes sense. And when it comes to trying to give the case of, yes, we are entering the end game, whether it's trying to draw the correlation to all the other assets and what they typically do before our end game move, or just looking at time-wise, it all, in my opinion, it's pointing towards the fact that this is what people have been anticipating for a while. So whether it's normal movement or it's people are anticipating it, therefore we're going to get different movement, it's very reasonable to say that this time around, it definitely feels different, and that's for good reason. Again, if we flip back to Bitcoin, one of the things that happened this cycle that a lot of people out there are saying that the halvening theory is dead, which is that the halvening was supposedly this big supply shock that reduced the amount of Bitcoin being released to the market that created a different balance in the ecosystem. And then 6 months later, we really see the results of that and the price takes off. Notably, this time around, we hit all-time highs before the halvening. And then after the halvening, we didn't hit all-time highs back until pretty much November when we got the giant pump after the election. And then it finally topped out in December of 2024 before making another top in January of 2025. So the things that are different this cycle is that we saw that Bitcoin was pumped faster before That's why we made new all-time highs before the halving. And then again, we finally get that extra pump after pretty much a full year of sideways consolidation. So there are narratives out there that are definitely showing signs that things might not be the same this time around. But we can definitely talk about that more when we get to that part of the show. Let's go ahead and talk about quarter three. I've got some numbers here I want to run by you guys. So let's take a peek at, that's right, Uncle Z made an Excel sheet for you. All right, so let's focus at the top. Let's look at some of our major assets. Okay, last 3-4 months effectively. So this row right here, that's today. That's what's going on right now. Bitcoin is pretty much up about 1.5% since last month. Ethereum down 5% since last month. Some other L1s just to track and give some context. Solana up about 4% since last month, and Cardano pretty much flat. AVAX though actually up about 30% almost, which is kind of cool to see. Looking at what happened in August, Bitcoin down, Ethereum up decently, Solana up decently, Cardano flat, AVAX slightly down. Let's go back and let's look at what happened for July. July was a pretty good month for Bitcoin, up about 8%. Very good month for Ethereum, up about 50%. Solana, decent month, up about 18, almost 20%. Cardano, 40%. AVAX, 30%. Let's go back and look at June. June was definitely the underperformer, but again, that's before Q2 even. Bitcoin was up 2%. Ethereum down 5%. This is definitely still when it was in that price suppression area. Solana down 8%. Cardano down 20%. AVAX down 15%. So the overall story for quarter three, was it was actually a very good quarter overall. We saw a lot of inflows. We saw Ethereum have its massive recovery, and the ratio for that to Bitcoin definitely made the turnaround and is still on the up and up from that. Solana had a massive month as well. It even got all the way up as high as $240 in September here. Early September, I want to say. Cardano, excellent July there, and AVAX, another excellent July, and then also an excellent finish here. So the picture I'm trying to paint with the data here is that overall quarter three was very good from the standpoint of overall token performance. Again, like we started off the show here, we said that July and August were really the big performers. September has been the news month, not the performing month. So all of this is kind of gearing us up towards what's going to be going on in quarter four. But most importantly, let's take a moment and let's talk about what happened at the Fed meeting. So I want to kick it over to you guys.
Well, Zenith, just go back. Hey, Zenith, go back to your chart real quick. I mean, it's excluding AVAX. It almost looks like they're mirror copies. I know ADA, Cardano did itself, but like I said, you said June and September were kind of flat months, and we had a big, strong June and July. I mean, okay, looks like just consolidation going on after big moves. Sums it up.
Dean, something else that I took away from this that you illuminated very well, and that as I think back on the past 120 days, 4 months, which is the span of this chart, is that the catch-up trade, honestly, the catch-up narrative from Solana to Ethereum has shifted, right? For people that are really in the crypto space, Solana has had an incredible run over the past 18 months or so. And just over the past 2 to 3, as you see here, Ethereum has overtaken it. The Sol ETH ratio chart is something that I watch and find interesting. And I do think that it found its top when the president launched a meme coin on Solana. It has been trending down, ever since. And that, again, that's a ratio chart. And so Solana can still go up. But Ethereum has sort of reclaimed its spot as the premier L1 in that time period, in my opinion.
That makes sense to me. So, by the way, pulled up the Solana Ethereum chart here. I believe that this is the move you're talking about. So pretty much April of 2025, all the way down here till mid-August of 2025, Solana was definitely losing ground to it. Only since mid-August to mid-September did we really see Solana make up some of those gains. It's definitely nowhere near where it was previously, and I would argue a large part of that is due to Ethereum's price lagging for a long time there. But it is interesting to see these two kind of battling it out for the runner-up to Bitcoin. Obviously, I think all of us here have a little bit more bias for Ethereum when it comes to being a more established and, I guess, reliable number two in the space. But it's Solana is a good indicator for the rest of the altcoins and the layer ones, in my personal opinion, especially considering the meme coin seasons that have happened throughout this cycle. They've happened on Solana. And whenever Solana runs, we see those things pump massively as well. So that ecosystem, in my opinion, is one of the most explosive ecosystems when it comes to price appreciation. So that's why I do try to pay attention to it as well.
I will say this about Solana. I feel like Solana's already had a tremendous run. And now it's a very crowded trade. I don't know if Solana is going to hit its next leg up as aggressively and outperform some of the others. I know what you mean. You're taking it as a temperature reading from the meme coins and the sectors like that, and that's understandable. To me, on that chart you just showed, that ETH Solana chart, to me it looks like I see a chart. It looks like
you're back.
ETH Solana chart. The ETH Solana chart you had here, I saw a chart that looked like, right here, that looks like it's being tested on what used to be support. Now it's becoming a resistance. I don't know. It's still too early. It's too early to tell, but that looks like it's definitely hitting some resistance there. I don't know. It could be an interesting chart to see how it comes to unfold. I still think Ethereum is going to outperform it, though.
That makes sense. So, by the way, this is the Solana to Ethereum ratio chart. If we flip over to the Solana chart, there's a different shape that's forming here. And notably, the different shape is right here in this end. But again, to throw it back to another chart, that is pretty much, well, we got to put it on a weekly now. That's because of this right here. So that is where you see the correlation between the charts. So Ethereum, Solana, and then the ratio. So to Dace, your point, yeah, Solana has really, really performed well for probably the first half of the bull run when it comes to this cycle. And we want to go ahead and pull some price ranges here from the all-time low to the all-time high that we've had. That's 3,500% gain over the last 2-3 years effectively. So this thing has run massively, meaning that there's a lot of people that are either still hugely in profits or they already took profits and are figuring out other places to go with it. We want to go to the more recent lows. That's going to be our $93 low here. It's we had a run up about 172%, so almost a 3x, definitely like a 2.5x, but now we're sitting right around that 2x level. So you make a great point there, which is that if we're looking for other things in the space beyond Bitcoin and Ethereum, Solana by market cap, I believe, is number 4 currently. I want to say XRP actually overtook it. But what we're looking at on this one is that this is a token that has run massively. So the question is, how much more can it go?
Yeah, and I think, it's interesting to look at some of these trends, like you said, and then measure the same trend on Ethereum. And at the same time, I guarantee you Ethereum has not had the same 18 months that Solana has. As you get further into crypto, people start talking a lot about holder supply, right? And what is the makeup of the sell pressure of the existing holders? The idea goes that the higher the price goes, the more sell pressure you have, right? And so it would stand to reason, loosely, that Ethereum can maybe run harder because people have not made quite as much money on it quite yet, so they're more willing to hold it longer. And so if we do get another big impulse across the crypto markets, I know we've got October 1, there's supposed to be an executive, a White House announcement about crypto. We'll see how much burger is on that bun, but yeah, I think, there are a couple of different catalysts that we could see in Q4. And if we do see those moves, again, my opinion is look to see Ethereum outperform Solana, but that's my take.
Makes sense. And just for the numbers here on screen, from the all-time lows of this cycle to what is our most recent all-time high, that's about only 463% gain as opposed to Solana's 3,500. So it's almost a factor of 10 how much more Solana has pumped than Ethereum this cycle. Again, it comes back to a lot of the factors that Ethereum's just been dealing with for a long time here, and also the fact that Solana was lower market cap, so it was easier to pump. Was it 10 times easier to pump? Well, the numbers say almost, yeah. But if you look at the fundamentals of what we were looking at the time, it didn't quite seem like that was the case. So again, when Solana had its massive run, that was really back when we had our the overall space was just going ballistic with the Bitcoin ETFs being launched and stuff like that.
I think you caught it already, Zenith, at the beginning. Yeah, which cryptos just recently had ETFs?
Doge and Solana recently had their ETFs launched.
Right. And what happened to Ethereum when the ETF launched? What happened to Ethereum price? Oh man, magically you got shorts can now pile on. Ethereum, Solana is at this all-time high. You got more people and influencers, KOLs, whatever you want to call them, that are getting all the attention for Solana. Of course, with we know what the president did. We know about that. We know about it's got all of this attention, and there's been just scam after scams, pumps and dumps, like consistent pumps and dumps over there. Me personally, I think Solana is going to be a great short. That's what I look at it as. Not saying I would short it here, but if I have all the ones that I would. I mean, are you going to get long a crypto that's now, that's had that kind of a run? That kind of a massive run, do you think it's going to keep outperforming other things that have lagged that are, we'll say, the large cap cryptos that haven't really moved much? I mean, it's a US based crypto. You can make the case. I just think that there's better plays than Solana. And not to say Solana is not going to do horribly. I just think Solana's price is going to get suppressed. I think those shorts are just going to get started on it.
I hear you, and I go for it, please.
Oh, I was just going to quickly say, to be real, like let's take the devil's advocate side of like the pro Solana person's still going to say, like, look, man, you faded it this long, you faded this long, and in the past 18 months, Ethereum has underperformed and it's outperformed. And I would say, okay, yeah, so you think that's just going to keep going, and like that again, the ratio chart tells the tale. That's why ratio charts are useful. They can really twist you up if you're not used to digesting a chart and thinking about a chart in terms of anything other than just USD value. But once you learn to take a look at.
All right, you're back.
I'm back. Can you hear me? Whether it's the gold to Bitcoin or gold to Ethereum, it's a couple of really solid ratio charts we brought to you guys this evening to be mindful about how you're making sure you're putting your dollar to the best possible asset.
It's true. And Tracker had a really good point there, which is Solana has already run so much. There's a bit of a investor psychological trick that goes on that you kind of have to like get yourself out of, which is that it's very easy to look at an asset that is already broken out and kind of like gaslight yourself into believing that it's going to keep going. Eventually, though, it does peter out, and then eventually does have a recorrection. So when it comes to trying to be the investor, you want to avoid the fear of missing out, the FOMO, if you will, or buying into the green candles, which is kind of the argument we're making here with Solana, which is that it already ran so hard. So the question is, how much more can it go? Theoretically, it could keep going, but at the same time, historical trends show that once the assets really break out, they break out for a certain amount of time, settle off, and then cool off. I think Solana has had a little bit amount of time where it had that
months,
cooling
man. I thought Solana ran for 18 months. I mean, come on.
Yeah.
I mean, interesting ratio. Look at Binance and the Solana. Look at that ratio. I feel like you could see rotation out of Solana into Binance. Maybe that's why Binance is starting to move. Keep in mind, Binance is number 5, Solana is number 6. Just rotation out of large caps. Sorry, Zane, it's cutting you off.
You're good. The final point with the psychological issue that you got to deal with is it's understanding when the assets run, the asset is run. It was previously undervalued back then. It's no longer undervalued. If anything, it's probably a little overvalued, and it has to find that correction point. So what we're getting at when we're talking about this is that for Q4, we're trying to look and identify at what things do we still believe are potentially undervalued. I think that Ethereum is still in that camp for sure. There's plenty of other good projects out there that have just been kind of bleeding and running sideways slightly down just due to the nature of either being an Ethereum based token. So they probably saw a decent little performance over the last 3 months. But before that, there's a lot of downside as well. So because of that, I would argue there are a good amount of assets out there that are still undervalued and have a good way to run in this market. At the same time, though, the Solana is an example of what I'm looking at, which is, do I still believe there's upside? Yes, I think it's going to be limited upside, but that the upside there is largely going to come just from the network effect or just being attached to everything else. And the entire market, I do believe, is going to have a very good Q4 based on past performance, time-wise, and everything else that's leading up to it, whether it's interest rates, ETFs coming out, overall job market getting not great, so they're going to have to correct for it in some way, and that might be quantitative easing. So That's what I'm looking at here. I do have one final round of statistics for you, gentlemen, for quarter three. So, ETFs. Let's look at the ETFs here. Gonna pull up my charts. Alrighty. That is liquidation. So here's your report for the ETFs for this quarter. Bitcoin for the month of July, they saw $6 billion in inflows. For August, they saw outflows of about 800 million. And then for September, it reversed and we saw $1.6 billion in inflows. So your total for quarter three for Bitcoin ETFs was $6.9 billion. Ethereum, July, they saw inflows of $5.4 billion. August, they saw inflows of $3.9 billion. And only in September have we seen about 800 million in outflows for your quarter total of $8.5 billion in inflows for the Ethereum ETF. So overall, this last quarter, the Ethereum ETF actually outperformed the Bitcoin ETF for like the first time ever. So if we come back down to our chart, thank you, CoinGlass, for making this terrible to view as always. But this is right here where we started. Bitcoin saw some good inflows, saw some outflows, limited inflows, but a good amount of outflows for the month. And then only recently have we started to see the inflows come back in for the Bitcoin ETF. Let's flip over to Ethereum. Ethereum ETFs, slightly different story. Let's go back. Here's our start of July right here, this little dip in the inflows. And then we see an absolutely colossal month there, pretty much to the day. Right at the 1st of August, we see some big outflows, but they're immediately erased by yet again other series of massive inflows. And then only right here, apologies for the chart, I know it's terrible, do we see this group of outflows starts the month and then continues on through the rest of the month. So that's why the charts or the numbers came out the way they did. But overall, the inflows were pretty substantial for the quarter. If we want to go over and look at the overalls, for the entire existence of the ETFs, Bitcoin ETF in the US alone has seen $500 billion in inflows. So about like 15% of that came for quarter three here. And the Ethereum ETF has seen about $10.8 billion in inflows for its entirety. So yeah, about 80% of the overall Ethereum inflows have happened in the last quarter. It seems like a bit of a trend reversal to me.
That, and to add to it too, the amount of volume on your dexes has grown tremendously as well. I sent you a link if you want to see that. There's a chart out there on DeFi Llama they provided on that Trading View article I sent you. You can see the massive amount of volume that's happened on dexes. So that's another thing that people are looking like Ethereum could also do. Of course, we already know the trends with the time of the months of the 4-year cycles and projecting what potential returns could be happening. Yeah, scroll down. This chart right here. That one.
There
right
you
there.
go. Ethereum DEX volumes jumped 47% in 1 week.
Yeah, that's pretty crazy.
That
Yeah,
is
but look
massive
at
for
that.
sure.
But look at the chart as far as the dexes going back from the bottom, which was right around into, we'll say Q4 of 2023. It's been just kind of growing and going up. Everything's been kind of, the volume just keeps growing on the dexes.
Agreed. And the volume pretty much perfectly matches the price performance of the charts, which is that this is like end of quarter one for 2024. That's when we have the massive pump in following the Bitcoin ETFs. Even Ethereum benefited from it and the price performed as well. And then again, last part of 2024, post-election, here's our first all-time high. There's the second all-time high. And then we do see it cool off as we saw the Ethereum price. But now these candles right here, these are the ones that we're talking about. That is the recent Ethereum rally, and it shows in the chart. And by the way, it did top the previous all-time high of the 2021 highs. This is early 2021 when we had the first of the double top. Second double top is right here. So there you go. Ethereum has now had more volume than the highest volume that we've had on Ethereum is now higher than the highest volume we had last cycle. So yes, it is heated up for sure.
And those are big numbers. I mean, you're going from 10 billion to 20 billion, 30 billion, now 40 billion. I mean, those are substantial amounts of money on the dexes that are growing. So
What this chart's got me wondering is how much of this DEX volume is
Bot.
perpetual short open interest, right? Because we know the net open shorts on Ethereum are also at all-time highs, and so or all-time lows, however you want to flip that term. But yeah, it's an interesting chart to sort of compare. I wish that there was a way to sort those things. I don't have one of those that way instantly handily, but we've visited that chart a few times and talked about the dynamics with Ethereum and how institutions are accumulating with one hand while holding the spot price down with the other. And so to me, that also signals a more bullish sentiment for Ethereum. And look, we've got, speaking of open interest, thank you, Z. Take it away, brother.
Yes. So, by the way, a graphic today provided by Dace. We have the Ethereum US dollar chart up at the top. We're looking at the areas where we have dips. The middle one here, this is our open interest weighted for the aggregate funding. So we notice that when it does go negative, that is also when we see liquidations increase massively. And we just had our single largest liquidation event pretty much for the year just happen in late September, right when Ethereum was on the downswing. We are a few days after this now, but it still stands that even post each of these events, there is a good amount of upside that happens, especially considering that this has been a good run for Ethereum. So it makes sense that we see these shorts kind of get liquidated and go towards the upside. And, well, we just had the biggest liquidation event for the year.
Yeah, so while we've been in this period where there's short pressure on institutions are slowly accumulating, we have these liquidation events. And so market makers like Binance, OKX, any of the big players in the space, they're going to hunt liquidity. And so when people open interest to the up or downside, it incentivizes these players that offer the leverage to move the price through those zones and liquidate the players. And so that's why you get these cycles on that bottom part of the chart, where every so often you get this big red dagger down. That is market makers rinsing leverage players, right? And so every time you get one of those big daggers down on the bottom of the three charts, that's leverage longs getting liquidated. And so the market makers make money. Obviously they're holding stuff, or they're playing their own games, but they're incentivized to have those big moments every so often where they cash in on longs that have been making money. And so, like Z said, think about it from the perspective of the people that drive the price down. What is their goal? Their goal isn't to drive it to zero. Their goal is to basically take stock of the players that are open with leverage and the ones that are too aggressive in their positions. They're like, what are those like little parasite fish, right? That like clean sharks or whatever. They clean the ecosystem. It's not always pretty, and if you're one of the people getting liquidated at your long leverage, doesn't feel good. But it does play a greater part into how the price moves in general. And like these dots are spiced out pretty nicely. You just got to count the months, right? So we can guess we might have 2 to 3 to 4, maybe 4 more months before we have another serious long liquidation event on this chart.
That's true. Tell you what, let's shift from our quarter. Oh, go for it, please.
I just wanted to add one more to it, just for the layman's out there. This is a straight up crime scene. That's what it is. I mean, this is literally snatching the money and taking off with it. This is exactly what that is. And you guys have been all over this. You could literally, like we've talking, you can literally look at where the big concentrations of leverage at, and that's where the price action is typically going to gravitate toward. And that's what Dace is saying. Market makers, people who have a lot of liquidity that can push the price up and down, can push it down or up to certain levels, liquidate those shorts or longs, take their money and then pump it back up to the next levels they want it to go to. And these early markets, due to their immature nature, unlike the NASDAQ or the S&P 500 and so forth, it's easier to be done on these crypto markets than it is in traditional TradFi. You need big market makers to make those kind of moves. A trillion? What's crypto? What's Ethereum? You know what I mean? It's small. So A play that people might want to consider if you're so inclined to do so. You could probably look at the Ethereum price action when the spot ETFs came out, and you could probably almost paint the same picture for Doge and Solana as far as price action and where monies might gravitate toward. Just throwing that out there for people that are interested to do some serious trading.
That's true. Alrighty, gentlemen, let's talk about quarter four. I know everyone's tired of us talking about it and following it, but I think it's really going to be one of the big narratives for quarter four, and that is the Federal Reserve. We followed this because one of the things that we've been waiting for has happened, and we're waiting for the other shoe to fall. We did have an interest rate, the smallest possible interest rate cut, happen in September. It is the only one that has happened for the entire year, and now we are looking at getting two more. So the dates that we're going to be watching out for: October 29th, December 10th. Those are going to be the days where we actually get the decision from the Federal Reserve on what they're doing with it. As it stands right now, we'll flip over to good old FedWatch tool by CME Group. These numbers are very likely to change drastically, although I would not be surprised if they actually don't change that much over the course of the month and then the month and a half till the next one. So we got October meeting pulled up right now. It is an 89, basically a 90% chance from the futures markets that it's signaling that they're expecting another quarter point drop. We flip over to December. Again, these are compounding on each other, so this one's even more likely to change, and it will definitely solidify its view after the next meeting. But for December, 66.8%, basically 67% chance that we're going to get a consecutive cut for that one. And then 30% chance of only one cut between those two meetings, and only 2.6% chance of no cut for both months combined. So overall, yes, we are looking to see that the Federal Reserve for the next two meetings is probably going to cut by a quarter point. More importantly, though, we've had the first rate cut happen. We have not had quantitative easing happen. You remember last week we covered on the show that the big standout question to Jerome was, okay, you've cut rates. Why are you still technically doing quantitative tightening? Jerome did answer and say that, yes, are we doing QT? By definition, yes, but it is very, very minuscule, and pretty much he chalked it up to just upkeeping reserves effectively. So that is the other shoe that we're waiting to drop, is we want to see that actually flip. If that flips and we actually see an injection of capital into the market instead of them continuing to pull money out of the market, that will be one of the signals that people are going to be looking for places to park capital, namely assets, which, yes, crypto is an asset. And that's one of the things that could really start a good run when it comes to crypto. I personally think that the system is already primed for crypto to continue to do what it does. If the Federal Reserve is not in play, what I would imagine is that we probably see a Bitcoin all-time high happen in the next month, 2 months effectively. With the Federal Reserve in play, that is the biggest thing that is leading to the narrative of the extended cycle. So I guess the question to you, gentlemen, is how do you see that situation playing out? Do you see a pump early, a pump late, a pump independent of whatever the Fed does? What do you guys see happening?
Something to point out. The FedWatch tool, I love that tool, but we cover it. Me and Jay talk about it a lot, and I think it is most reliable about a week out from announcements and projections. It's a good sentiment read for exactly how you used it, right? It's not something you take to the bank. It's something you look into the crystal ball, look forward as much as you can. I think we'll hear more dovish talk, and I do think, just like he's been consistently raising them back, a few years back, I think he will continue to be the consistent person that he is, barring any sort of banks failing, right? Which I guess you would bucket under a black swan event. Which
that would definitely be black swan, I think.
You would think, but then you look at how much money we're printing, man, and like the national debt, et cetera, et cetera. I don't know if that's in that bucket, but that's besides the point. That's another conversation. Yeah, I think with crypto, I think Bitcoin is tied to the M2 and it's lagging right now. So I think you could see a return to Bitcoin dominance in Q4 with the alts and the other layer ones running later and maybe even in Q1. And I think a lot of this has to do with what you said, the Fed, and how the business cycle numbers react, both to the Fed and also to the historic data rolling in. The Fed is the first mover, whereas your ISM data comes in a bit later. And so Yeah, I think a combination of those factors will tell the tale. If we get an uncharacteristic bigger cut than normal and we have a parabolic move on Bitcoin, well, maybe we see the end of the top, the end of the cycle come on in, or, the top of the cycle come on in sooner than expected. But as I mentioned in Degen Roundtable, I think honestly that we could see it run even longer, depending upon the market dynamics and how the business cycle numbers respond to the rate cuts. If as we continue to cut, we continue to see the stock market perform, that's another thing to watch. The Russell 2000 is another good canary in the coal mine, so to speak. So yeah, look, I think we're right to watch the Fed, as boring as they are, because they have a big impact on business cycle sentiment. And at the end of the day, crypto compared to the size of all of the U.S. stock market, et cetera, it's much more minuscule, and so it can get pushed around by a lot of factors.
That makes sense. The point that I bring up with the Federal Reserve is that it is traditionally a phenomenon that we see, that when money is being printed, assets go up. It also just happens that the timing is very, very coincidental for this one, which is that the crypto market is continuing to do what it does. It's getting to the point where it's entering its end game. The Federal Reserve is one of those things that could possibly, if the timing is correct, it could actually extend it. That is the major point that I'm pointing to for the possibility of the extended cycle. I am still that same guy that says I'm going to assume the trend is going to hold until I have confirmation that the trend is broken. So personally, I'm still looking for a top pretty much next month or two. But if that trend is broken and we have the data points that align that show that the Federal Reserve is injecting capital or injecting liquidity or more money into the market, that could be one of those things that triggers that event. Is there anything else that you guys are looking for when it comes to things to actually justify the extended cycle?
Well, not other things, but let me elaborate a little more on what you guys were talking about. So normally the Feds will cut rates for 6 to 14 months before quantitative easing will even be performed, outside of a financial crisis, 2008, things like that. So if you're looking at 6 to 14 months, it's 6 months. That puts you in February, right? We cut rates in September. Am I correct? September, we cut rates. So that would take us to what? February? Before, if you're based off the regular time frame, the earliest could be maybe in February. Keeping in mind, Jerome Powell is out of there in May. I think you're going to see these rate cuts going into January, February. I think at that point, they're more likely to probably start cutting rates more aggressively at that time. Say when Jerome gets out of there, could be in May, could be, or not. It could be in April or May, whenever Jerome Powell's out of there. Could be sooner than later. Who knows? Maybe maybe he decides to step down. Who knows? But whoever the next person is going to be put in is going to get those rate cuts. The administration's being very aggressive to their rate cuts. They want rate cuts, and they're going to get them one way or another. They are making it very clear here. There's rumor.
Trump came out and was like, he should have cut 2 points. I don't know if you saw that.
That's a bit much.
Yeah. So he's been really pissed off with Powell. Let's call it what it is. Agreed. So if they're going to get these rate cuts, because the Fed needs to restructure debt. There's a lot of debt that needs to be restructured. They need lower rates in order to get that. There's probably, I'm completely speculating here. I'm sure during these tariff talks, there were probably debt restructuring deals that were probably being made on the back end too, potentially. A lot of things were probably were occurring, most likely. That's a big shift. I mean, think about these tariffs and everything, all the shakeups that went through. There's a huge negotiations that were going on with all the countries with the U.S. So a lot of deals were made. We don't know what the details of those were. We're probably never going to know. But just another incentive to push these rate cuts. So if it's an inclined, you might get a quarter. You're going to get 2 more quarter cuts probably this year. Might get another quarter cut probably in January or February, whenever they next meet. When they can cut, they'll cut then. And then at that time, you're probably going to start hearing talks of who the new person's going to step in to replace Jerome Powell, whoever that person gets in. And then you might start seeing half cuts. I think you'll see half cuts before you'll see quantitative easing, because typically they're going to push those rates down enough before they start tapping into the quantitative easing aspect. And that's typically how it goes. Keep in mind, if something huge happens, I know the labor market's looking rough, so who knows? That might come into play into them being more aggressive or doing something with quantitative easing a little bit before then. I just don't see it happening based on historical data and everything. We're not in a liquidity crisis, we're not. So I don't see them doing anything like that. I think earliest they may do quantitative easing, it's going to be right around that May time when Jerome Powell is no longer, in charge. And I think that's what's going to happen. That's it.
Tell you what, let's shift. Talk about the Federal Reserve enough. Let's talk about crypto. Dace, again, you have provided us some excellent graphics here. So, good sir, what are we looking at here?
Got just a simple oscillator in terms of momentum as it relates to the BTC tops. So across the top, you've got the BTC price in those green boxes. Each of those green boxes is your bull run, so to speak, with the right-hand side of each green box being the cycle top. And if you look at how this particular chart has paced out the momentum, it falls out where the bull run starts at the bottom of each of these momentum troughs, or actually just before the bottom. And our Bitcoin cycle tops halfway up this oscillator. And if you see here, even though we've called everything from the 15K bottom a bull run, this indicator would indicate that we've just walked into it, right? We're just starting the actual bull run as it pertains to the momentum in the BTC chart. And so this combined with the other one I sent, which is the fear and greed, it's Bitcoin with fear and greed index overlaid over it. Those are my two best cases for the extended cycle from a data-driven standpoint. Tracker, I think you nailed something about the Fed, and something else that's going to be interesting is in Q1, we're going to have the conversation of, are they going to drive rates to zero before they do QE? Or are they going to, do we keep the rates at 1% and then do QE? Or do we go to zero before we do it? I think that will be certainly a conversation that happens, and that will fuel speculation. And I think it will fuel it further, right? So we've got another chart here showing, hey, the time to speculate is not over. And so, this is another one where we've got certain momentum indicators at the bottom. This is the global risk index. And so when you look at its tops, it tops out. Each of these yellow lines, I believe, is the halvening. Is that right, Z?
Yes, sir.
And so it's timing out Bitcoin's parabolic move post-halving. And typically, you'll have a global risk index peak after the halving. And if you look here, the global risk index is not even broken above the midline. And we're the furthest past halving with it not cracking the midline, right? I mean, every halving prior to this has almost perfectly coincided with the global risk index flipping from red to green, meaning north of that 50% midline mark. And so that is as extended an indicator as you could find, in my opinion. And if you notice, right, take a look at the sections of the chart, the gold Bitcoin chart there running across the top. We just haven't had the same move. It's taken longer and it's gone more shallow this cycle than previous. And so, yeah, in a nutshell. And look, yeah, it's kind of funny, man. Gold's done the opposite, right? So the past 3 cycles, gold has had more muted runs than Bitcoin. And this cycle so far, gold has been the one with its banana zone performance, where it's just gone parabolic on us. And so if the trend that you're showing here holds, when gold tops out, let's say everybody pick your number, 4K gold, whatever, that's when the quote unquote Bitcoin bull run starts. Even though we're above 100K BTC, according to these 3 charts, we haven't started yet. So that's there's some bull hopium for you.
That's true.
Yeah, and just to add to that, the quantitative easing, they don't ever historically ever, it's rare cases, but they don't ever do quantitative easing until the rates are down between 0 and 1%. 0 and 1. We're at what, 4.25? Where are we at?
4 flat.
4 flat
zero.
now. We still got we got 3 whole percents that we can cut into, whether it's doing half cuts or full, 3/4 cut, 3/4. I mean, there's a lot of cutting that can still occur. They got a lot of leverage to cut down the rates before they got to start doing quantitative easing.
Right. And so that spacing in terms of the Fed's historic actions combined with some of these momentum indicators tells me, man, we could be going a good bit longer.
It's true. here's another thing that tells me we might be going a little bit longer. I know we're really trying to read into the charts here on this one, but going back to this one here with our momentum crosses, if you actually look at the shape of everything that's going on, our cross is notably flatter than all of the sharp corrections or redirections that we've had in the past. Something like that is to take it at face value of what it's trying to tell me, is that it's telling me is that it's not turning around nearly as fast as it has in the past. Because of that, it means that it could take longer to do so. Longer to do so means longer cycle. And then to flip back over to our global risk index, this is the longest that the global risk index has stayed under that midpoint line. We did try to come up above it here in 2024, but never quite broke it. So this one is a little more nuanced in my mind, which is that because we have longer time under the global risk index, it means that we're either going to see a more muted or lower high of the global risk index or a shorter one. It's possible that you can make the argument that it would be longer in and of itself, but if it does that, then it really starts to break up the natural rhythm of everything going on of the highs and lows. So just because we have a longer time here below the average doesn't mean that we're going to have a longer time above the average as well. So I'd say all that to say that I think the possibility of a very sharp climb to the top of our season is possible. But also, like we talked about in the past, it's possible that based on the actions of the Federal Reserve, it could extend it as well. But overall, what all of them are collectively telling us is that this is not even close to over yet, which is that there's still a lot more to go. And
exactly. And I think everything we've just laid out gives you a lot more narratives to a longer run and extension than to sell it in, Q4 and call it a day. I just don't see it happening. But what you're looking at here, all these charts tell you, you're simply seeing all the evidence and data to suggest we are going into a more maturing market. And that's essentially it's what's happening.
I would agree. Another little chart here that tells that story. It's everyone's favorite Bitcoin dominance chart. So we did not hit the highs that we saw in the last cycle before the dip. We have started to see our own dip going on here, which is that we topped out at about 66%, and now we made it all the way down to 57, currently sitting at about a 58. Are we saying that this trend is officially broken? Not confirmed, but it's definitely the start of it. It's nothing nearly as sharp as this part right here for 2021 that happened, but at the same time, it does have some similarities to where it started off, where we started off coming down, bit of a leveling, came down, bit of a leveling. Now we'll see where we go. Outside of that, when it comes to actual price performance, one of the things to keep in mind is that these things can run hard. So let's flip it back to the week, automatic, and let's go. Oh gosh. I have my. Yes, I do. Excellent. That makes it so much better. All right. So if we look at it, the price performance can go up drastically very quickly. So even if you just want to look at the gap between our double top here, that's effectively a 2x, even a little bit more than that. So that jumped all the way down to about $30,000 Bitcoin, and then went all the way back up to about $69,000 Bitcoin. If we take it a little further back, again, very similar story when it comes to the previous all-time high. It was pretty much a 2x in the course of like 2-3 months there. And then before that, even, we had very aggressive runs as well, where you go pretty much again, do another 2x in the course of this time, like a month and a half. And this is for Bitcoin, what is the heaviest asset out there, which should not be pumping the hardest. Go over to Ethereum. Ethereum 2021, where are you? Right there. All right. Again, let's look at it. Between our double top, it did a 2x. Between this little lull and what is course of 2 months there, another 2x. Even before that, course of 2 months here, basically a 3x. So the point of bringing this stuff up is that when we get to this part of the market, things happen fast and they still go big. So is it possible to say that Bitcoin could still do a 2x from here? I personally think it's a little less likely just due to the amount of liquidity that's been injected into it at this point and how much more there is to go. But yeah, theoretically, it is possible. So the idea of $200,000 Bitcoin, it's not as crazy as you think. I personally happen to put it at like a 10% chance or less. But even some of your higher targets, like hitting 154, maybe even the 180 level, those are still very much in play, and they can happen aggressively and quickly. Looking over at Ethereum, this one I think is a little bit of a different story, which is that largely due to the fact that we have just barely squeaked out a new all-time high. The possibility of hitting something like $10,000 Ethereum is still very much in play. Again, I think that 9,000 would be a safer target for sure, but even that is still just a straight up 2x. If you want to take it all the way up to 12,000, that's pretty much a 3x. If you want to go all the way to 15, that's like 3.5x. And the idea that this kind of move could happen in the course of 3 months, it's not unheard of. The idea that it could happen over the course of 6 months, definitely not unheard of. So the point of me going through all this is to say that, yeah, we covered why we don't think it's over yet. And this is how much it's not even over yet. I still think that $9,000 Ethereum is a very reasonable price target. I think $154,000 Bitcoin is a very reasonable price target. And if you want to look over at stuff like Solana, see, where were our all-time highs? Yeah, we already made new all-time highs. So the idea that this could even go up to maybe $500, it's not too crazy, especially when we get to that tail end of the season where things really go like parabolic and we see that massive effect and we get the true altcoin season at the end of the market. This kind of stuff is not out of the question. So again, the reason I bring it up is that, do these numbers sound fictitious? Yeah, they kind of do. By the data, are they still in the realm of possibility? Yes, I do think so. Gentlemen, am I crazy?
You're not. You're not crazy, but this is the caveat I would say. Everybody needs to keep watching the markets, because depending on how violent the move is how violent the snapback gonna occur, or potentially the more violent the move up, the more profit taking that's gonna cause maybe a shorter bull run than what it could play out to be. The fact that institutions are coming in, you're seeing a maturing market that could avoid us from having these monster quick rallies to the upside, somewhat suppressing them because of all the shorts and the leverage plays essentially with the derivatives market that could kind of keep things in check. So we might be just moving into a grind up. Could be that as well with institutional buying and adoption across the mass markets. We could see that occurring as well. So really, the answer your question, how quick is the move? If the move's going to be very fast, then you should expect a very hard sell-off, whether that's the top to be determined, but how quickly we move is how quickly we're going to have a snapback, sell-off. The slower the grind up, the more it can be digested and have sideways consolidation, filling gaps and so forth, have a nice healthy chart. I think those are the two big things you have to watch out for going into Q4 to give us some signs of how sustainable is the market overall. That's pretty much the simplest way to look at it. Keeping in mind, though, I mean, the gold market, I know the gold's moved tremendously. So now gold is currently at 26 trillion. The gold market's at 26 trillion.
Wow.
Crypto's what, 4 trillion? We have 4 trillion still, maybe a little less now. Could we 2x the crypto market?
We're at 3.9 trillion market cap.
Right. We could 3x the crypto market right now, and we'd be basically half of gold. I mean, does that seem a little crazy? I would say if we got there that quickly, depending how quickly we get, like I said, it wouldn't be sustainable. We'd probably have some sell-offs. But with all of the things that are coming, and investors know what's coming, the only thing that could derail all of this would be like, well, basically the things that would scare everybody at night. That is like moving into some type of hard recession, like almost like a depression with the amount of unemployment that could kick in. That's the big thing. But here's the thing about crypto markets. You have to have a negative narrative and a positive narrative to cause markets to move up. It's climbing that wall of worry. We keep talking about climbing that wall of worry. That's how markets are created. If everybody was bullish on everything, you're pretty much at the top. If everyone's negative, you're at the bottom. So there's a good mixture of negative and positives going on with the market. Thus why things keep grinding higher, just because of all the macro and all the data we've already laid out tonight. That's going to fuel this thing that could keep moving forward.
Jace, what you think?
I think you nailed it, brother. I was going to echo the sentiment that Tracker already touched on, which is something you said, which is like counterintuitively, to watch for when the cycle's over, you wait for the big retail pump that gets everybody so excited about Bitcoin. that's the end. And so, as we watch momentum, to echo something, to turn it into how Tracker put it, is like you need those healthy moves. If you have a big euphoric run, that's how you end a run, not how you start one. And so don't forget that. If you get all excited because your friends made money in X, Y, or Z thing, ask yourself if you're getting in the same position as they did, if they have already exited. So always something to remember. There you go, my friend. We are all on this little ride together. Break it down, Zenith. What is it? What am I looking at here?
We are looking at the psychology of a market cycle. Right now, I would argue that we are definitely in belief. Time to get fully invested. Yeah, we've been there for probably a few months. Thrill, buying even more on margin. Got to tell everybody, we're probably getting close to that. Have we hit euphoria? No, I don't think we've hit euphoria yet. But the chart doesn't lie. It happens every time, which is that when you get that blow off top, that's when things are truly euphoric. I don't think we're there yet. I think it could start. We could definitely start to see good chunks of it in quarter 4 here. But
Well, I know for the traditional market. Sorry, go ahead, Dave.
Oh, I was going to say you're right. Traditional, like this chart applies differently to every chart. Earlier in the show, we were looking at ratio charts, which we were saying, like, is Solana further along, right? Maybe Solana is in that anxiety zone, whereas Ethereum is in its belief, and optimism zone. We're trying to assess where each of those charts are in their little cycle. Also, and very importantly, whilst the stock market is cleanly up at thrill and euphoria, right? They're pushing all-time highs. Same thing with gold, pushing all-time highs. The first chart we looked at in terms of the ratio chart was Bitcoin to gold, or gold to Bitcoin rather. And so when gold, what did we show? We showed that when gold topped out, that's when Bitcoin starts its bull run, right? So when gold hits the euphoria on this chart, that ratio chart was showing us that Bitcoin is typically right there at optimism, right at the bottom of its last parabolic move. And so that's why ratio charts are cool, because you can plot them against each other and try to get a relationship between what side of that euphoric run are we, is this particular asset on. And so this, while this is a super helpful, like, staple, right, in finance circles in terms of trying to understand the psychology of the market, it's important to note that obviously not every chart moves at the same time. They all move differently. They all have, different amplitudes from high to low, and they relate to each other. And that's why we're here observing some of those ratios.
True. To give you a little context about how the stock market's doing. Starting in January of 2024, we saw 57 weeks of effectively new all-time highs. There were 3 dips in there where for pretty much 3-4 weeks it didn't make new all-time highs, but the overall run lasted 57 weeks, a full calendar year. Currently, after all the tariff talk, we're at about 14 weeks of consecutive all-time highs. So yeah, that seems pretty euphoric to me.
All right, this is what I'll say. Gold is definitely getting toward euphoria. I think it absolutely is getting towards that level of euphoria. Solana's probably in complacency. That's where I'm thinking it's at right now, just because it already had this massive run up. There's been a lot of stuff there for all the things we already talked about. Could it go maybe a higher? Sure, but I feel like it's getting kind of in complacency. That's my take.
Ethereum is 38 new all-time highs this year, my friend. I don't know if you can get more euphoric than that.
Well, you get euphoric when yeah, it's there. It's there. And that's just how many more legs does it have in it? You know what I mean? I mean, look at that. Look at the candles. This print. I sold out all. I've already rotated just this last few days ago. Well, I think, what is it, on Thursday or Friday? I can't remember what day it was. It might have been Wednesday or Thursday. I rotated out of all of my rest of my gold positions, and I moved it all into Ethereum. That's what I did. That was my 2 cents. Now, am I a sucker? Am I full? Time will only tell, right? But that's what I had made those moves. It's simply rotating out of the winners and moving into the laggers. And that's the other thing we keep harping on. Just because you want to be in dry powder, you don't have to sit in cash. You could sit in gold and other assets that are doing really well, that are going to earn returns while you're waiting to make moves. There's always a time and a place, and gold's been a great place to hold your dry powder recently, for sure. I mean, that's free money. It's how it's played out to be. I was just trying to park money into gold just to basically just have it in something outside of the US dollar, but that's here nor there. And I think if you go back to that psychological chart, Bitcoin is probably getting, it probably is getting closer to, because keep in mind, I feel like, I mean, Solana ran harder than Bitcoin in my I feel like I could be wrong, but it felt like Solana ran a lot harder and caught a lot more people by surprise
It
than
did.
Bitcoin. So that's
Sure
why I
did.
feel like that's why I feel like it's in complacency. And then also because of all the craziness that's happened on there, there's so many pump and dumps. It's like the place to be for pump and dumps. So I feel like you're kind of in this area, and Solana people are probably going to talk trash. That's fine. That's fine. But I think it's in complacency. I'm looking at Bitcoin's probably get into that thrill area. And I still feel like Ethereum is somewhere in that belief or optimism phase right now, depending on who you're talking to. Because if you think about it, what has it really done? It's just got back to the all-time highs. It hasn't done anything. If you've held Ethereum this whole time, you're not happy. You don't feel good with Ethereum right now. Are euphoria? Is euphoria hit you in Ethereum? Hell no. If anything, you're in optimism or belief phase. Maybe that this might be the time. I feel like we're kind of in optimism, but that's my 2 cents on that one. And all the other altcoins, yeah, you're in optimism belief phase. That's where you are. There's nobody getting excited except the Solana folks back in December. That's when euphoria hit for Solana, was in December.
Makes sense. Yeah. To wrap it up, Q4, I think we have high expectations for. And there's even the possibility that Q4 isn't even the end of the ride. And telling you that things can get kind of crazy. So again, that's why we bring up the psychology chart to let you know, like, hey, here's a little preview of what's going to be coming down the pike, not just from the price standpoint, but from how people are going to be feeling about it.
Right. No, that's an excellent point, Z. And I think, like what you just said is literally why we're here, right? We are holding assets that are long duration and pretty illiquid, right? In terms of the returns are high, but you can't always access your funding. And so 10% of the time, this channel and this show is going to be managing emotions and lows, really, really bummed out, and we're showing up anyway, and you can feel it. And then 10% of the time, we're probably going to sound like crazy people. And so that's the nature of investing in something that is only that is highly volatile, right? And that has a small window of liquidity. And so something to bear in mind. The steady people who show up every week in, week out, you're showing through your discipline that you're somebody who can get through those times of illiquidity and through the long stints of the cycle where it's not always a party. And so thank you guys for joining us here this evening.
Absolutely. And by the way, folks, if you're interested in getting more of this excellent content, you can head on over to walktheblockndf.com, hit our membership page, and that is where you can sign up to get exclusive access to our Telegram, where we have excellent streams going on multiple times a week, covering all of the markets and a lot of other stuff going on. And by the way, I do want to give a special announcement here. We are going to be doing a special stream this Thursday, 9 p.m. Eastern time. We're going to be talking about profit-taking strategies. We're going to go over all the methods you can do it, some common ones, and I'm even going to be breaking down the numbers and show you the potential upside and downside risk to each of those strategies. Outside of that, we are also going to be taking it to a special bonus hour after the stream inside of our Telegram, where you, the people, can ask us all kinds of questions about anything we talked about tonight for the special stream on Thursday, or any other stuff you got. So AMA, profit-taking webinar, if you will. That's what we got going on Thursday. But yes, most importantly, folks, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we can all win together. So we are very, very excited for everyone that is already in there, and we hope that you guys join us as well, because there's always room for more. Alrighty, gentlemen, before we get out of here, any final thoughts for Q4 that you want to throw out there? Tracker, you go first, sir.
Follow us. Watch the markets, and if things start to move very quickly, know that that's a sign that there could be profit taking earlier than we suspect, or if we kind of grind up, it's going to be more signs of a more maturing market. On the flip side, if you are so inclined to put on shorts or any type of leverage plays and stuff, I would watch Doge, and I would watch Solana's price action, because I feel like it's going to probably mirror Ethereum of what's happened in the past. Just saying, the ETFs are out now. The big money is going to be out there, and you can almost start sniping what price actions are going to be potentially moving towards based on the things like Dace and Zenith have been talking about. Where is the most liquidity?
True. And by the way, little tidbit here for you. The Solana ETF has been live since pretty much November or September 11th. And on average, it's usually had about $16 million in inflows for the day with pretty much no outflows. So I'll definitely be keeping a weather eye on that one for sure. All right, Dace, over to you, sir. Final thoughts on Q4?
Yeah, stay tuned. Stay tuned, right? You can find me at X and Instagram at Dace Northall. I try to post some of this stuff, but the main place I post it is in the Telegrams over at Walk the Block and at DGen Roundtable. So come check us out there.
There you go. Alrighty, folks. I guess I'll give some hard predictions here. So when we celebrate the new year, we can find out if I'm a charlatan or not. I predict.
Zeno gets to stick his neck out. This is exciting.
Hey, I'm happy to do it. I predict 2 quarter-point cuts. I predict we will not see predict we'll see a continuous reduction in quantitative tightening. The only thing that would change that is if we got some very drastically different numbers when it comes to the economy, whether it's jobs or inflation. But 2 rate cuts, no quantitative easing just yet. I don't think that's happening. I think that Bitcoin will make a new all-time high in October.
You heard it here, folks.
I think the you know what? Screw it. I'll just go wild. I'll say we'll hit 150K. Yeah, whatever. I'll be a charlatan. We'll hit 150K Bitcoin in October.
Ooh, that's a spooky Halloween, man. I will be watching.
That is aggressive, by the way.
That is an extremely aggressive. I figured
It's
you'd
not.
say maybe
It's
130,
not.
135, maybe.
It's really not, though. I mean, a 25% move is if you go look at historic Octobers, it's not out of the cards, man. It's not out of the cards.
It's not because you've had this sideways consolidation going back since July. We've been going sideways in Bitcoin, so it's been building this sideways move. So no, it could absolutely do that. I mean,
October's put in a 30% move before, man. I mean, October's been maybe the biggest month for Bitcoin in all of the years if you take an aggregate monthly performance. And so, no, I mean, sounds spicy. Zena's smart with the calls. I like it.
I thought that was going to be me getting over my skis on that one, but okay.
I was thinking 135, 130, but you went 150. Okay, hey, I don't problem. Hey, if gold has taught us anything, it can move quick.
That's right. Well, look, man, in the gold BTC chart, dude. I mean, look at that thing. Look how hard gold has moved, right? If it follows the same pacing and pattern with gold taking this parabolic all-time high move, I mean, we could see a crazy move. So I love the call. I think it's a great one.
I got to ask you guys then, if that's the call for BTC, what's the call for ETH?
Z, I can tell you, I saw this morning, Ben Cowan said that he thinks Bitcoin dominance is going to return to all-time highs, and then you're going to see liquidity flow back to the king, to Bitcoin. Really? So it could, I bet Ben Cowan would agree with you, but then he would say, well, the alts are wrecked because they soaked up all the money. And so I'm interested in how you're going to answer this question.
I know, I feel like the obvious psychological answer to say is Ethereum claims 5,000, but that's some pretty low-hanging fruit. I think we could see $6,500 Ethereum by the end of October.
I was going to say 65 would be nice. I'll take it.
That would be nice. I'm going off.
What did Tom Lee come out saying that he thinks fair value for Ethereum is $12,000 right now? And he said fair value for BTC is like 240K or something. I mean, he called out the 240K Richard Hart target for its fair value, which I thought was wild.
Yeah, I think I disagree on that one. I don't think 12K Ethereum I don't even think we're going to see 12K Ethereum. I don't think we're going to see 12K Ethereum by the end of the year. If we saw 12K Ethereum,
I
would love to see it.
I don't think by the end of the year either. I think if we see it, it'll be because we've extended into 26, And I think we could see BTC top normal, right? And the rest of the market keep running. We followed the M2 Bitcoin correlation a lot a few months back. I know we didn't look at it, but Bitcoin has broken away from that correlation hard. And so that's something to watch. Like, if it has its catch-up trade, that's probably Ben Cowan's thesis for why he thinks that BTC dominance will return back to all-time highs. And so we could easily see what you're calling for. 150K and 6.5K ETH. I'd take it, man.
Hey, you were saying those 2x moves. You were saying a lot of 2x moves that were happening in the past. So if we are going to get those 2x moves, I think it's more likely to get a 2x move in Ethereum than it would be in Bitcoin. So that would put you around 8,000.
Correct.
Ethereum.
Yeah. No, it's true. 6 to 8K Ethereum this year has been my target, and like beyond that, we'll have to have the cycle extend for it to go higher in my mind, but we'll see.
There you go. Well, you could just say I covered all that data of like 2x moves are possible. That I'm sitting over here at like 50% for Ethereum. We'll just chalk that up to my personal bias of how Ethereum has treated me this year.
Look, things happen. You live through things and they change you, brother. These things happen. Here's hoping you're right, Tracker. That
well,
Ethereum it's just how the math works. It has the capacity to move harder, right?
And just to add, Ethereum has lagged Bitcoin so much. I keep going back to January 1st of 2023 when Bitcoin really started moving. Ethereum would have to get to that 8,000 number even if Bitcoin sits at 110-ish, 110K. If the Ethereum has to get to 8K to match the same move for Bitcoin. So
true. By the numbers, that's how it works.
That's how Tom Lee is getting his 12 and 14,000K ETH targets, right? He's looking at that BTC ratio chart for sure.
All right.
So,
well,
the moral of the story is look at your ratio charts, friends. It seems like we've covered a lot of those this evening.
That's true. It's true. All right, everyone, jot down your notes. Come back in January, and we'll see if I'm a dirty liar or not.
Can't wait.
All right, excellent. Well, folks, that is all we got for tonight's Q4 thesis show, if you will. We had a good time looking over Q3, which was a good number. I hope you guys had a good quarter out there as well. And I think we have high expectations for Q4. I feel like we might have been saying that for a good chunk of this year, and we've been slightly let down outside of the first quarter. That was a good quarter. I like that one. But yes, that is what we got for you tonight, folks. Please stay tuned for this Thursday show. That is going to be an extra special show. I will bring the numbers, but also not try to get too deep in the rabbit hole on it. And then also for all you guys in the Telegram, please stay tuned for that AMA, that post-webinar debrief, or any questions you have. And we will, again, have more numbers for that one as well. Outside of that, folks, thank you so much for tuning in. We are Walk the Block. We are trying to navigate digital finance together. If anything, I think we're predicting following seas and fair winds for the next quarter. But outside of that, I do want to say thank you so much for spending time here with us tonight. I know it's a bit of a longer show, so gentlemen as well, thank you for indulging me. I feel the conversation just flowed, and here we are, hour and a half into it. But outside of that, folks, thank you so much. Until we catch you guys next time on Thursday, by the way, good night.